If you're shopping for a home and you are either going to an open house or you're scrolling online, whatever you do, make sure that you are represented by a top 1% real estate agent in their industry. You must have that. The other piece to that in your tool belt needs to be a pre-approval letter from me. You've got to get pre-approved before you start shopping for houses. How else will you know what you qualify for? And you certainly don't want sticker shock, thinking you can afford a certain amount, and then you find out what the mortgage payment is going to be. How much time have you wasted?
Okay, let's go.
All right. Well, welcome everybody to Luxury Living in Southwest Florida. My name is Daniel Abreu, and I am the team leader and founder of the Abreu Group out of Realty One Group MVP. And today, this is a topic that is going to affect everyone looking to buy, sell, or invest right here in Southwest Florida. What we're going to be talking about today is mortgages and everything that you need to know as far as qualifying programs and everything. And I have a very special guest joining me today, Denise Richards. Denise has been a mortgage broker here in the area for 25 years. Denise, if you could introduce yourself, welcome. Thank you so much for doing this with me. And just tell us a little bit about yourself.
Thank you, Daniel. Thank you so much for having me on your show. I appreciate it.
Of course.
Mortgages have been my passion for many years, as you mentioned, going through all kinds of crazy stuff, including the Great Recession, the crash, kind of what's happening now a little bit. I have worked for every type of mortgage lender and broker that you can possibly imagine, including mortgage banks. About 2.5 years ago, I got my broker's license. So I'm now an independent mortgage broker where I'm able to work for my client rather than the bank. Gives me so much leverage in terms of being able to structure a transaction, the freedom to be able to do that I never had working for somebody else. So it's been a breath of fresh air. I've been able to serve my people at a much higher level. So my whole story of mortgages, my gosh, I think just getting to the broker status was a pretty big deal for me. Very proud of that.
That's awesome.
Yeah.
I love working with independent brokers. I think it's so much better than working with banks or any of the bigger financial institutions because I think you guys just have more options overall.
I think so too. And then you also have the whole service side of things, right? Like I had a client yesterday that I met with who was pre-approved with Navy Federal Credit Union, probably some of the best rates in the business. But I was able to not only beat the rate, but then remind him that when he has questions on a Saturday or Sunday or in the evening, he actually has a human he can call that he knows by the first name and ask any question he needs.
And having been an agent for so long, I can tell you how important and how refreshing it is to have somebody that you can contact even on the off hours.
Yep. Sometimes it's just a matter of holding someone's hand. It can be a very stressful process. They've got so many people coming at them during, a purchase, that it's nice to have a soft place to land, be it their agent like you or me.
So just to kind of dive into it, like rates, all the different programs that are available out there, pre-approvals. I mean, the whole mortgage process can sometimes come off as like a big alphabet soup for somebody who's not in the business. From your perspective, what's changed the most about getting a mortgage in the past year or two?
Well, turn times are much faster.
Well,
I
agents will love that.
I can get my loan approved same day. I submit to underwriting and I have my loan commitment later that afternoon. So in terms of being a buyer's market where we are not having the volume that we've had, it's made things a little bit easier in terms of that turn time. Like I say, getting things done, appraisals are coming back in just a matter of 4 or 5 days, which is really wonderful. We're also seeing some of the guidelines changing just a little bit to try and help encourage affordability in terms of being able to afford a house. Loan level pricing adjustments, for example, those have changed a little bit in the favor of the borrower. That helps when you have sort of what we call hits to the rate. And then in addition to that, they're actually talking about doing a 40 or a 50-year mortgage. I don't know if you've seen that in the news yet.
I did, and it's on the list of things to ask you. And since you brought it up, I mean, what are your thoughts on a 50-year mortgage?
So if you are a person who is going to buy a house, never refinance, never move, and you're going to live in that house for 50 years, maybe it's not the greatest idea. But if you're like most of the people in this country, you're buying a new house every 8 years or so, right? And you're going to refinance when the market shifts in your favor. The other piece to that too is that when, you're a young person, you're obviously going to increase your income potential, right? So things are going to change. And at a time right now where we do have high prices and a little bit higher rates, it does make it a little bit harder for some of those folks to get in the door of home ownership. The other piece of this puzzle too is that interest rate truly is just a number. It really is just a number. And so is the term on your mortgage, right? So if you're going 50 years instead of 30 years, I bet if we did the math right here and I had the ability to show you, an extra $50 a month would change the term of that 50 years exponentially. So you can literally be your own bank and control this any way you want. But the reality, if you went 50 years, 10 years without ownership and you only rented, regardless of the term of that mortgage, you're in a better position than you would if you never owned property. So
It's
that's my
funny.
2 cents.
It's funny that you position it like that. I was just listening to a podcast yesterday or the day before, and he was basically saying the same thing. Like paying an extra $100 a month on your mortgage is going to reduce the term of that mortgage by maybe about 10 years.
Yeah,
And all of a sudden you're looking at free and clear just because you've put a little bit extra, and that increases your equity in the home and everything. So as appreciation continue, I mean, like you said, you get to be your own bank and you're controlling exactly what it is that you're putting your savings into.
absolutely. I sort of think that some folks are equating this to maybe a car loan, right? If we were to do 10-year car loans, that's a depreciating asset.
Right.
You'll be upside down in that vehicle for the rest of its life.
Or roll it over into something else and just keep
Into something
building the
else,
debt.
and have a huge fat. This is why we see these $1,000 car payments. But it's not the case with real estate. This is an appreciating asset. And even though we've seen a short term of properties going down in value, if you look at the course of history, if we were to look at a 4.5% average increase in value on property year over year, that's incredibly conservative.
And just to clarify, where you say we've seen a slight downturn where prices have come down a little bit,
Mhm.
I'm going to go as far as saying, yeah, they may have come down a little bit from where they were 2 years ago, but nobody's underwater who bought in 2019 or 2020.
That's 100% correct, Daniel. Absolutely. And that's what people don't understand. They get all caught up in this short period of time that we've been in, which is truly a market correction. If you remember after COVID, values of homes skyrocketed. And in different parts of the country, they saw different averages of increase in value. South Florida saw 50% increase in value of property, a lot of our areas. So when you take a look at that and you look at, for example, the Midwest, maybe they saw 20% increase in value at that time overall. They're not going to see the drops in values like what we've seen because our market correction is bigger.
Yeah. And if you hear the dogs barking in the background, I'm so sorry. I got three of them and they're just lunatics. There's nothing I can do about it.
Makes me like you even more, Danielle, knowing that you're a dog person.
So that kind of brings me to my next question for you. Oh, excuse me. What are some of the biggest misconceptions that you're seeing from buyers when it comes to qualifying for a loan right now?
Mhm. Well, I think for the most part, my first time home buyers, I will say 80% of them will say, "Oh, I'm not ready. I need to do X, Y, and Z first." Well, they have a preconceived notion that everything has to be exactly perfect for a long period of time before you're going to qualify for that mortgage. And more often than not, they're ready to go. And when they're not, I'm able to help guide them. Hey, we do need to do X, but we don't have to do Y and Z to get you there. That might be a big misconception. Another one, again, interest rate. People are under this impression that if they don't have a 3% interest rate, they shouldn't buy a house. But that's never going to happen again. We're never going to see that again in our lifetime.
I'm
Um,
hopeful. Maybe in about 10 years, I'm hopeful. I've got hope.
well, because we were so low was the precipice of all of this that's happened,
Yes. Yeah. I
really.
completely agree. Where I agree. I joke and I kid and I say I'm hopeful. Do I think that one day we'll see rates in the threes? Yeah, it's possible. Is it likely to happen anytime soon? No. We'll definitely never see it again in the twos. That's for sure.
Right. But threes, I think you might be right about that.
I mean,
That's there's still a little margin in there.
right? Just give it a little bit of time.
Yeah. Yep.
So let me ask you this then. What do you wish every realtor's client knew before they apply for a mortgage?
That they can use their mortgage broker to help their agent get into a better negotiating place, especially right now while it's a buyer's
Ooh,
market.
go into that a little bit more. I like where you're going with
Okay.
it.
Yeah. So right now where it's a buyer's market, some people aren't even really sure what that means unless they're a buyer and they just think that's good news for them. But again, they may not know what it means. But when you have more inventory than you do buyers, it becomes a buyer's market. And that means the sellers are more motivated to unload their properties. And when sellers become motivated and their properties have been sitting on the market for a longer period of time, they are prepared to do all kinds of things like, oh, I don't know, pay all your closing costs, or even better, pay all your closing costs and buy your interest rate down. That's like the biggest piece, right?
Right.
It's very hard for an agent who doesn't have a great relationship with their mortgage professional to really be able to dial in on what it would take. You've got that buyer who says, I looked at a payment at 6% and I can't afford it. It's too much. That does not mean no. There's ways to negotiate that, whether it's temporary or permanent, and get the seller to pay for it. That's the big piece right now. So some folks might think too that a buyer's market just means you can get a better price on the house, but that's not the biggest bang for your buck.
And I'll tell you, you're 100% right. Sellers are much more motivated right now than they have been in a while, and they're willing to negotiate a lot more. I literally, just before our call, I got off the phone with some sellers that I currently have their listing. And I said, hey, I talked to the buyer's agent, and the buyers are interested between yours and another property. Their biggest hang up is your house doesn't have a fence. Without even questioning or balking, they were like, offer $10,000 for the fence. Offer $10,000 seller credit right now for the fence. Like, just,
Excellent.
I mean, so yeah, you're 100% right. Sellers are much more willing to negotiate right now than they have been in a long, long time. And buyers need to take advantage of that. I agree 100%.
Absolutely. And in addition to that, I mean, this market correction is slowing down. We're not going to see these price cuts for much longer. So, in my opinion, we are in a very sweet spot for a buyer to negotiate and get the house that they want, at least get their foot in the door. The other piece to this too is that investors are maybe thinking it's not the right time to buy property or invest. But again, it goes right back to getting that interest rate where it needs to be so you debt service, right? So that investment property isn't costing more than it's going to make you in a month. We've got fantastic programs like that where the qualification is based off of the income potential for the property and not the purchaser's tax returns or other proof of income. So there's lots of different ways to get it done. And again, for those investors too, it's their market. It's their market where the seller is willing to give up all kinds of stuff for them. Build that personal financial wealth through home ownership.
Through the
Right,
home
Daniel?
ownership, exactly. Let's jump into just talking about the pre-approval process. One question that I get asked a lot from buyers is, what is the difference between a pre-qualification and the pre-approval, and what kind of a difference does it make when they're in the negotiation process?
Hmm. That's a great question, Daniel. And it's even more important for the sellers to understand the difference too when they look at that pre-approval letter or that pre-qualification. So in basically the pre-qualification letter means a licensed loan officer or bank representative has pulled credit, taken your word for your income, and thrown together a pre-qualification. I
Based
mean,
off
ultimately
information that
that's
was
what it
just
is.
verbally given.
Correct.
Yeah.
And I've even got I've seen where years ago, before we even had soft pulls, I had somebody from Bank of America had issued a pre-approval letter to my client, and they had never even pulled credit. So imagine being the agent and getting close to your deadlines and finding out, oh, they have a 420 credit score. Who
God,
knows, right? So you don't want those kinds of surprises, that's for sure.
no,
So
nobody
your
does.
pre-approval, yep. The pre-approval means that that file has not only had credit run, you've got income documentation that's been reviewed, you have run automated underwriting findings and gotten your approval and submitted that loan to an underwriter, a human who will approve that loan. And that is much more powerful because there's far less chance of there being any surprises or last minute things that are discovered, if you will, if you have that done ahead of time.
And is there anything that buyers can do right now that will strengthen the pre-approval in the market as it is right now?
Yep, absolutely. They would want to definitely give me a ring. I would counsel them, talk to them, kind of see where they're at, what they're wanting to do, depending on their feedback. So maybe it's savings, maybe they want to save a little bit more, maybe they think they want to save more because they want to be able to get a lower mortgage payment, and that may not be the answer for them. So it's very important that they talk to me at the onset. I try to determine what their goals are, where they want to be, and then we can talk about maybe what their weaknesses could be. Maybe I've done a soft credit pull and maybe their credit score is a 650 and they want to go conventional. And although they could, score's not high enough to get them the rate and pricing that they deserve. So I'm going to work with that client and get their credit score up where it needs to be so that they'll qualify for the best program out there, the best interest rate. And, if the credit score is high enough, and their down payment is low, the mortgage insurance is inconsequential. It's a very small amount.
I agree. In
So
the
there,
grand scheme of things, I mean, if you can't afford an extra $50, maybe we should be talking about doing something else right now.
exactly. But those folks that have the lower qualifying conventional scores, like 650, their mortgage insurance is going to be sky high. So there's things that I'll do to work with them to get them in the quintessential place that they want to be when they're ready to pull the trigger.
Cool.
Yeah.
And how long is a pre-approval typically good for?
It's usually good for 90 days. I let my clients know that, at that time, don't have your credit run, don't close any accounts, don't quit your job, that type of thing. And as long as those are intact, the 90 days is not an issue. And the only reason why it would expire at that point is because of the credit. I would need to pull a new one. So that's about it.
And this is an ongoing argument that I have with some buyers. So you're the authority. You're going to settle it right now. Do you recommend that buyers talk to a lender before they go house hunting, or should they call you after they found the property?
People can get so disappointed if they wait until after they find the property. They've got to go. Listen, if you're shopping for a home and you are either going to an open house or you're scrolling online, whatever you do, make sure that you are represented by a top 1% real estate agent in their industry. You must have that. The other piece to that in your tool belt needs to be a pre-approval letter from me, of course. But you've got to get pre-approved before you start shopping for houses. How else will you know what you qualify for? And you certainly don't want sticker shock, thinking you can afford a certain amount and then you find out what the mortgage payment is going to be. How much time have you wasted? And not just your time.
Yeah, everybody's,
Right.
everybody's.
Yeah, so get that pre-approval first. It's paramount.
I've had buyers tell me, "Oh no, let's look for the house." I said, "Let's find out exactly where you're going to be approved for." And the reason, and I tell them every single time, the biggest reason is I don't want you to go look and fall in love with an $800,000 house and then be disappointed that you can only afford the $600,000 house. Like, it's just better to set the expectation early and know exactly what we're going to be dealing with.
You're right. And I almost compare it to window shopping, right? When you go house hunting, you're not window shopping. I mean, for the most part, some people do
Some
for
people
design
do, some
ideas and
people
things
like
like
it.
that, which is fun. But the reality is that you're not window shopping. You need to know that you can afford what you're looking at in the window.
100% agree.
Yeah.
Let's go ahead and move on to interest rates and strategies that buyers can employ right now in the market. We've seen interest rates kind of fluctuate quite a bit over the past couple of years.
hmm
How are you seeing buyers adapting to this new normal?
They are finally coming around. And I guess you could say it is a new normal. Our country went 30 years before we ever even saw a mortgage interest rate below 7%. And here we're squawking about 6. I guess with the increase in prices, it does make it a little bit
I mean,
harder. But
I understand the counter argument. When my parents bought their first house, my dad would tell me, "Oh, interest rates were 14%," and I was like, "But you were buying $100,000 house, like it's not quite the same." So, what is it that you are telling buyers right now with that in mind?
yeah, I mean that's the crux of it, right? And I think we touched on it a little bit earlier in our conversation in that, interest rate is just a number. And when somebody says, "What's your interest rate?" my response is, "What do you want it to be?" Let's negotiate it down to that, right? Somebody comes to me and says they want a 4.75 rate, I'll get it for them. And I'll show them how to negotiate that deal with the agent's help so that we can deliver exactly that. So sometimes it's working backwards, and especially if your client or a potential buyer, their hang up, if you will, is that number, that interest rate. Well, a low interest rate, it's great, but moreover, just maybe a bragging right that you're looking for. You, your neighbor got 5.75, and you want to brag that you got five and a quarter. I don't know, but it's just that's not the thing
I
of it.
mean, I've heard lenders brag that they're already pre-qualifying people or pre-approving people in the fives. It might be
Mhm.
599, but they're in the fives, right?
Yep, yep,
So,
absolutely.
can you explain? And this would probably be helpful for any agents that are actually watching as well.
hmm
But can you explain exactly what factors beyond the Fed actually determine what a person's interest rate is and how it is that you are negotiating for these lower rates?
That is such a good question. You ask the best questions, Daniel.
I certainly try.
Seriously. It really is. So everybody gets caught up in hearing about the Fed reducing the rate. And although that's exciting, especially for our consumer debt and auto loans and things of that nature, they'll feel the effects of that right away. Mortgage rates are tied to the 10-year Treasury bond. And the 10-year Treasury bond is all about confidence on Wall Street, right? So it can be very heavily affected by hearsay, by somebody getting up and announcing something, a politician or a cabinet member, whatever it may be, and people will get very sheepish, and then the bond market shrinks and nobody's buying them, and the cost of them goes up, which means the mortgage rates go up, which would explain why when the Wall Street market was doing so well and mortgage rates were going up. And as we progress through, the government's doing some pretty cool things right now to try and increase the value of the bond, the 10-year Treasury bond. So there'll be more activity in purchasing them, which is all good news for the home buyer because it will eventually bring the mortgage rates down. Now, more often than not, when we hear about the Fed getting ready to drop the rate, Wall Street's already reacting to that. And we're already seeing lower mortgage rates. This last drop that the Fed did, mortgage rates went up after that. And this is why. With the government shutdown, Rates have really not done much of anything, but from all the research that I've done after they reopen, which I believe just happened today, rates should come down a smidgen. But prediction, I don't see anything huge happening between now and the end of 2026. I think we could get down into the lower fives, if I'm being honest, especially with the government loans, VA and FHA. Those rates right now are 5.5.
Right.
So, I think we could get into a much better spot. I think it has a lot to do with a consumer educating themselves. Don't shoot yourself in the foot because you heard somebody say something. Make sure you're doing your own research. Being a critical thinker right now is the difference between retiring wealthy and maybe not.
Amen to that.
Mhm.
And we touched on this just a little bit with like talking about rate buy downs and stuff, but are you doing anything else creatively, like arms or seller credits? Are you using all those to your benefit to try to get your clients better rates?
Mhm. That's interesting because um, adjustable rate mortgages are tied to yet a different index, not the 10-year treasury bond, not the federal funds rate, totally different. And it's been a long time since adjustable rate mortgage rates have been considerably lower than a fixed. And so for the risk that hasn't really been, to take an adjustable rate, it's not necessarily been, a big sticking point for a lot of my clients. Using those seller concessions, getting that motivated seller to give up everything that you can, that's really where we're getting the biggest bang for our buck right now. Yeah.
Are there any scenarios where you think paying points up front really makes sense for a buyer?
hmm Absolutely. So that also goes to the pricing and the 10-year treasury bond and the compression on the margin. But when the compression on the margin has more room, buying the interest rate down doesn't cost as much. You can get a bigger bang for your buck. So we're going to start to see that happen again soon. And when that happens and it's a reasonable amount to buy the interest rate down, it can sometimes work. The things you want to look at is how long do you plan to have that mortgage? How long do you plan to stay in that home for certain?
Yeah.
And then based on that information, the monthly savings that you get from buying the interest rate down, when you look at the cost to buy the interest rate down, you see how much time that's gotten you on the reduced mortgage payment. See, and if it's like, let's just say it's going to cost you $5,000 to buy your interest rate down, and it's going to save you $500 a month. That's going to only take you 10 months to pay that and make it break even, if you will. So if that's something that you're thinking about doing, or maybe your mom said, hey, you should buy your interest rate down, but you're not sure if she's knowing what she's talking about, you should definitely reach out to a mortgage professional so that they can do the math for you, show you how that breaks down, and together you can see, and it'll be illustrated if it makes sense or not to buy that interest rate down.
Okay.
The other piece to that too, though, Daniel, is that there are temporary interest rate buy downs,
Okay. Explain that.
which, yeah, so only the seller can pay for those. Buyers are not allowed to. And ultimately, what happens is the seller pays for it. That money sits in an escrow account, if you will. And for the savings of the monthly payment, the points, it's deducted from that account. So it's temporary. It could be like if you did a 3-2-1 buy down. For the first year, your mortgage interest rate would be 3% lower than what you locked it in at. So if you locked in at 575, your
You're
interest
in the
rate
twos.
275 for the first year. And then the second year it would go up 1%, the third year another percent, and then it would stay fixed at the rate that you locked it in at. But it's a great bridge to get you from here to better affordability, maybe when rates go
And
down.
it's a bridge to get you to, yeah, exactly, when rates go down, because in the next 3 years, if we do see rates go down
Mhm.
again significantly, then maybe you refinance into that rate, lock it in, and you've saved yourself thousands over the life of the loan.
Thousands, way more than whatever it cost the seller to do. And as a matter of fact, that temporary interest rate buy down is a great negotiating tool because it doesn't cost the seller that much. they're not nearly as expensive as buying permanent interest rate buy down.
That's interesting. Good to
Yeah,
know.
it's good stuff.
Let's kind of jump into some Florida specific lending challenges that we've got right now. Florida has some unique factors, flood zones, insurance costs, HOAs. How do all of these affect mortgage approvals and the debt to income ratio?
That's a great question. Florida's always going to be different, right? We're different than
We're like the
everybody.
Wild West. We do
We are
things our own way.
100% the good, the bad, and the ugly, all of it. So we're hearing a lot in the news about how insurance rates have skyrocketed. Well, they've actually come down. Met with my insurance agent that's within my business network, and she, along with another agent that we both just saw on Tuesday, mortgage insurance premiums are coming down. You add into that, we have more carriers in Florida. The weak ones are gone, the strong ones are here, and premiums are coming down. So that has been a little bit probably mindset. If you work with a good insurance agent, they too can kind of negotiate those premiums to get them to where they need to be so that you qualify. Now, flood insurance, that's a whole nother ball game. So if you're buying a property and it happens to be in a flood zone, you have options though, which is very cool. So if the current owner has a flood policy, it will
It can
transfer to you,
transfer. Yep.
and it will be so much less than a FEMA policy. Now, the other side to that coin, too, is that there's privatized flood insurance that is not a FEMA policy. And in some instances, those can be considerably less expensive than a flood policy. So there's lots of ways that I've worked around that particular issue. It's never stopped one of my clients from being able to afford or become approved for a home. Um, the other piece of that is the taxes. So property taxes have come up also. They have.
Yeah.
Now, I have heard, in the news that Governor DeSantis is looking at getting rid of property taxes for Florida homeowners when it's their primary residence.
Yep.
I don't see it going away completely, but,
Well,
you know,
I saw somebody, I was actually listening to another podcast this morning and they addressed this specifically where, yeah, there's a chance he gets rid of the property taxes, right? But you're still going to have a tax bill because we have the non ad valorem and the ad valorem. So if he's getting rid of the ad valorem, we're still going to have the non ad valorem taxes on there. So we're still going to be paying CDDs and everything else that gets included in that non ad valorem part of the tax.
water,
However,
sewer,
however, I mean, wouldn't it be
garbage.
nice? I mean, I know it would be great for me and my significant other. Uh, we went over the tax bill not too long ago, and she tells me taxes this year are $6,000. Wouldn't it be nice if it was 2,500 instead?
It would make a big difference. But again, it goes right back to how you're going to negotiate the deal. Let's say you get a property where the taxes are high, and you have to qualify. And don't forget, Florida has a homestead exemption. So if it's your primary residence, you get a discount. But let's say you're buying a home that the homeowner at the time did not have a homestead and their taxes are incredibly high. That's where you're going to kind of negotiate that money out of the seller to buy that interest rate down to compensate for the higher taxes. So I guess, you hear so much stuff on the news about affordability and housing. And I just feel in my heart of hearts that when you're educated and you're talking with real professionals who know what they're doing, you know, have I ever told somebody it's the wrong time to buy a house or they shouldn't get a mortgage? Absolutely. Depending on their situation and when the home that they're looking at, I'll tell them no. But for the most part, these things that we hear about in the news, the talk, the gossip, whatever you want to call it, it's not necessarily true. And don't shoot yourself in the foot during a buyer's market like this. By not at least exploring it, is what I say. The other thing, too, I mean, you're younger than me, but 2008, everybody that bought property in 2008, 9, 10, 11, and you know them now, are any of them not wealthy?
Yep.
Yeah.
So
So true.
let me ask this. All that being said, is there anything that out of state buyers, in your opinion, specifically need to know about anything that might surprise them or anything like that when they're applying for a mortgage to purchase here?
Hmm. Well, lots of things. My gosh, we are mostly a tax-free state in the biggest sort of way. And so when
That's a
people
good
are buying a
surprise.
second, yeah, people are buying a second home here in Florida, I do talk to them about, their goals, what their life looks like, what they're really doing, how much are they going to use this property for? And then we talk about maybe becoming a resident of the state of Florida. If they're not working and holding a job up north or wherever they are, it could make sense for them to change their primary residence to the state of Florida so that their pensions are not taxed, so that they aren't paying all that state money and city money, local municipality taxes, that we just don't have any of that here. And even if it were a true second home and that's not an option for them, you could buy a second home with as little as 15% down. It is very common here in the state of Florida. A lot of our snowbirds have a home here and a home up north. Um, you know, uh, Second home purchases are, everybody's got them, and the insurance on them is not like it would be on an investment property, right? It's like a primary residence that's, obviously only resided in a short period of time, but insurance agents understand this,
Yeah.
so the premiums aren't terrible on those either.
Okay.
Hmm.
Let's kind of jump into some loan products and stuff that you specifically or like investors that you're working with and the products that they're offering. For first-time home buyers, what loan programs are you doing right now that are the most popular and the easiest to qualify for?
Hmm. That's a great question. So FHA, hands down, is the easiest program to qualify for. It only requires 3.5% down. Interest rate on that program is the lowest of any of the agency programs. Um, it's a great way for a first-time home buyer to get in there. You can use gift money for your down payment. So if you have a family member or somebody who wants to help you out, that's a great way to go. Right now, the state of Florida is offering Hometown Heroes. I believe it's still funded. That is for our first responders, firemen, nurses, school people, and it provides them with up to $35,000 toward their down payment
That's
and closing
significant.
costs. It's a significant program. Um, the other program that I work with some, not a whole lot anymore, but the USDA, yep, that's right, the United States Department of Agriculture, they have a home loan program. Their rural home loan program gives zero down financing, 0% down financing for properties that are located on their rural map, right? So that's in our area, probably anything east of I-75
Yeah.
for the most part. And that allows them the 0% down, and the mortgage insurance on it is even lower than it is on FHA. So it's a great program in that regard too. If we're struggling with down payment, that's a great way to go. Um, yep. And then there's all kinds of ways that we can structure to get the closing costs paid.
Um, Kind of shifting gears a little bit, but what options do you have right now for real estate investors or folks that are looking to buy a second home here in Southwest Florida?
Hmm. So with investors, we have lots of cool programs. I mean, almost stated programs, if you will. And the interest rates are very similar to a conventional interest rate. It's shocking. Um, they're probably the most fun to do. They're the easiest to do. And I love working with investors, helping them build that wealth through homeownership. In terms of investing too, though, another thing that we didn't really cover, and that is even a first-time home buyer who buys a duplex, for example.
The
Okay.
famous house
This is
hacking.
this is how you get your foot in the door to that personal financial
I
wealth,
like it.
right? So when you do that, you're able to use the future, what the rent will be on that other side to help you qualify. And then you're walking it into investment opportunity right then and there. So whether it's a brand new construction duplex or whether it's existing already, a lot of my first time home buyers who have that mindset, they see themselves doing that. I suggest to them, why not now? Start it right now. And then
and it's beautiful because you walk into it, you have a home, you have your mortgage that you've been approved for, but the rent is going to cover either a significant portion, if not the entire mortgage payment, and you're basically living for free. I think it's a genius way to get into it.
it is genius. I had a young man who was of that mindset, and I was working with a builder who did these duplexes um, all over the place. But especially here in Charlotte County, where I am, they're everywhere here in my community of Deep Creek. And I was so happy to get aligned with him because he was a builder who understands interest rate buy down. He offered up 20 grand. This gentleman client, he got 4.75% interest rate on that duplex. So his debt service was beautiful.
That's awesome.
Yeah. It's great when you can work with a builder who really truly understands that because they've got their profit margin. They know what they need to net.
Yeah.
And in this buyer's market, they have some room.
And they're taking advantage of it. I've got a whole hour's worth of speeches regarding what builders are doing right now. I could go on and on about that, but yes, they do
Yeah,
have room, and they're taking advantage of it, and they're adjusting their strategy right now too.
they are. Indeed, they are.
Kind of shifting gears a little bit more towards the luxury end. Can you just kind of cover quickly for me what the difference is between a jumbo loan and a normal conforming loan is, and how luxury buyers right now can position themselves to qualify for the jumbo loans?
Those are great questions. So, conventional mortgages are federally regulated completely. With the federal guidelines and regulations, there's all kinds of stuff I could tell you about those in terms of them being qualified mortgages, being under a certain loan amount. I think our loan limit now is over $800,000. So those loans that are over that amount would be considered a jumbo loan or a portfolio loan. Those are not agency loans. They are not backed by Fannie Mae or Freddie Mac. Those are portfolio. So the lender is either holding that portfolio or they'll sell that off. Getting qualified for a large jumbo loan, you really need to sit down with your mortgage broker because there's so many different ways to negotiate the interest rate and how you put that loan together. Trying to find out the client's pain point, if you will. Is it money out of pocket? Is it interest rate? Dialing that down and getting that ready to go before they start shopping is probably it's absolutely paramount that they do that. So getting ready, especially in that kind of world, in the luxury world, you want to be prepared. You want to walk in there and know your stuff and be with a top 1% agent like you and have that pre-approval letter from someone like me. So
Do you see rates being significantly different between the conforming loans and the jumbo loans?
they can be.
You just
There's
gave me the
times
lawyer
where
answer. It depends.
it really does. I mean, it depends on the market, I've seen jumbo loans be 2 points different from a conventional loan. I've seen them be 0.75 higher than a conventional loan. They'll almost always be higher than a conventional loan. Again, interest rate is what do you want it to be, and what do we have to work with to negotiate it?
Good to know.
Yeah.
Let's just kind of talk a little bit before we wrap things up. I want to just talk about some tips and some pitfalls that you commonly see on your end of the business. So, what are the top three mistakes that cause closings to get delayed or fall apart um, during the financing stage?
Wow, that's a really good question. So there's a few things. I mean, we have an appraisal done that determines the value of the property, right? We want to make sure it's at least as much as the purchase price. Sometimes
Ideally,
if it does ideally, and once in a while those planets don't align and the value will come in short and the agent will go to the seller and ask them if they would be willing to bring down the price. And if they say no, and the buyer doesn't have the money or doesn't want to, move forward, that would definitely squash the deal. Absolutely. Um, if I have somebody whose income is unique, maybe it's commission income, tip income, maybe they are on a per piece work type situation. Um, I could be looking at their income documentation and then get the verification of employment, and it could be something completely different because it's changed and the client didn't tell me. I think probably the biggest, if I had to put number one, it's the communication. If there's something that I didn't know, when you start to get a mortgage and you are working with somebody, you must trust them implicitly because you have to give them every piece of information about yourself. And if you don't, they're going to find out anyway. So make sure it's somebody that you feel really good about working with, right? Um, let's see, what else would there be? Inspection period. Things fall apart during inspection. That happens sometimes.
I'll jump in and I'll give you a story. Um, Back in the day when I was first really getting started in real estate, I started backwards, right? I wasn't an agent first. I was actually in title.
Hmm.
Um, and a deal that I was preparing the closing docs for, I'm trying to get together. I'm trying to get with the lender and everything. And I don't know how it got this far, but literally the day of closing, the buyers are sitting in the conference room. I am trying to get I'm trying to get docs, um, and because we had already balanced the CD, the whole 9 yards, like we were done. We were set to. Something came up the day of closing, and the lender somehow discovered that morning that the buyers had gone out and bought and financed a brand new Mercedes and all of the furniture for the house.
Hmm.
And based on what that did to credit that morning and everything, they didn't close. I felt so bad for these people.
Yeah,
And
that is the third. That is absolutely the third item right there. With my clients, I tell them do not use any credit until after we've closed. Don't apply for credit. Don't use your credit cards. Because what happens at the lender level, just before you close, they do what we call a credit refresh. And all it does, it doesn't pull a new credit, but it allows the underwriter to look and see if there's been any changes since the original credit was pulled. So there's no inquiry, anything like that. And what probably happened in that case is that new debt put their debt to income ratio too high.
yeah,
They lost their approval. And that has happened to me before. But it doesn't happen often because I always tell my folks, please don't apply for credit.
ever since that day, every buyer I have ever worked with, I tell them the story so that it puts the fear of God into them, and they're like, no, we're not going to touch anything. We want everything to go through. So yeah, that's got to be. It was one of the most heartbreaking things. Thank God I wasn't the agent on that deal. But yeah, that
Oh, yeah.
that that to me was just heartbreaking that day. I felt so bad for those people, and the
That's a
deal ended
terrible
up not closing.
situation.
It was a disaster.
Yep. Yeah. That's tough.
How can buyers nowadays, speaking of credit and everything, protect their credit and avoid any big financial missteps during the mortgage process?
Well, you want to stay in close contact with your mortgage broker. And again, you would probably want to, before you even apply, you want to be monitoring your credit, even if it's on something silly like Credit Karma, so that you're at least aware of what's on your credit report. You have a general idea of where you're at, and you get notified if anything changes with your credit almost instantaneously. So if there's any fraud that's getting committed, you'll know about it. If there's anybody that's trying to steal your identity, you'll know about it. Whether it's before the transaction or during the transaction, you'll always want to be aware of your credit profile and exactly what's going on.
And what's one simple thing that buyers can do right now to improve their approval odds within the next 30 days?
Keep their credit card balances low. Again, don't apply for any new credit. Um, don't go get the great big car loan. So I have seen this quite often, especially with young folks. They don't own a home yet, and they just went out and got a brand new car. They have $1,000 car payment, and they can't afford the house because of the car payment. So really, even before any big purchases, if home buying is on the horizon for you, make sure you're in communication. You build a relationship with a realtor and a mortgage broker so that you're not making those mistakes beforehand also. Mhm.
Kind of looking towards the future of lending, and I know we've touched on it a little bit during our conversation, but where do you think we're going to see rates start to ease in 2026, or do you think we're just on a longer cycle of stability right now?
I Right now we're in a longer cycle of stability. I think that once we get through some of the political climate stuff
Yeah.
that's happening right now, and again get back to that confidence on Wall Street, which we're getting there, I think we're going to start to see some improvement. But right now, a little stability isn't a terrible thing either.
Um, Also just kind of talking about, yeah, I agree with you. Stability is good. I'm here for it. No more craziness like the past couple of years. We went from one spectrum all the way to the other, and it was nuts.
Yes.
But kind of talking a little bit more about the future, I've seen some new trends with some of the lenders that I've known in the business, and I'm curious on your take on it. Have you seen stuff like AI doing underwriting and all that?
Oh my gosh.
Oh, that reaction was priceless. Thank you.
Well, we're not ready for it.
Amen
That's
to
for sure.
that.
I have one of my preferred wholesale lenders that I work with started an AI program excuse me, on behalf of us brokers to reach out to clients as an AI assistant, and I hated it. I absolutely did not like it. I did not want a robot reaching out to my clients ever, and I had them shut that off immediately. So
Would you ever
I
want an
guess
AI? Would you ever want a robot or an AI actually approving a deal before you even set human eyes on it?
no, I would let my sweet pup Lulu approve those loans before I would a robot.
Yeah. Yeah. I've seen some lenders that are now using AI. They have certain programs where it's AI doing the underwriting and the qualification. And
That's
it sounds
weird.
interesting in the law, but there's just way too many possibilities for something to go wrong. And, robots will see black and white. They'll see it exactly the way they're programmed to see it. AI is going to see it the way that it's programmed to see it.
Right.
They're never going to have that intuition or that the thought or the creativity that you or I could have and say, I know 7 ways that I can still get this deal done. I just
A
I
couple
don't like
things.
it. I wouldn't send my clients to somebody using it, but I wanted to hear
No.
your take.
There's a couple things on that too, though, Daniel. When I think I mentioned earlier, we obtain these automated underwriting findings, right? Plugs all the information of the loan into a computer and it spits out an answer. We've had that for 20 plus years, 25 years, and it's basically AI. When you think about it. It's basically AI. But once you get past that point and you have to document everything that's in those findings, you do need a human being as an underwriter to say, hey, look, I know there's a way that we can get this approved. Have you thought about using this to document that? AI is never going to do that for you. And I think it's a very slippery slope. The moment that we give money making decisions to the hands ultimately of a computer or an AI, I hope I'm retired by then.
You and me both. I have one last question for you before we wrap things up today. And if somebody is thinking about buying a home in the next 5 months or in the next six
Mhm.
months, um, what should they be doing right now to prepare for that purchase?
Building those relationships with their mortgage broker and their real estate agent. You want to make sure that you're working with the right people before you're ready to go. And you want to make sure that those people are going to be in your lives for some time, not just a transaction, not just a one time deal. You want to be able to reach out to a human and ask those questions that you have whenever they happen to pop up. So I guess I lost my train of thought there. Maybe you edit that out.
Uh, no, I mean you were going down the right path, in my opinion, at least. Other than building a relationship with their agent and a
Mm,
lender and everything,
mhm, mhm,
I mean, what are some of the biggest steps that buyers should be taking right now to prepare
mhm,
for a purchase in 6 months?
mhm.
Um,
Monitor their credit. I mean, that's a huge one. I don't care where you're doing it at. You want to monitor your credit, like I say, whether it's Credit Karma or your credit card provider sends you information. You want to be able to see it. You want to be able to get notified if anything's changing. There would be nothing worse than to think you're all ready to go buy a house only to find out that somebody has stolen your identity.
yeah.
Bad time to find out. So make sure you're monitoring your credit. Save your money. That's important too. The more money that you have toward the transaction is just going to sweeten your terms, sweeten your interest rate. Um, those are the most important things. And definitely don't go buy any furniture
Or the
after you're
Mercedes.
under contract.
Denise, where can people reach out to you? How can they find you if they're ready to get pre-approved or if they just want to run some numbers and talk scenarios with you?
Actually, my website is a great place to start. Professional.net. There you will learn a lot about me. You'll be able to schedule time to talk with me one on one, whether it's a phone appointment or in person at my office in Punta Gorda. The name of my company is The Mortgage Professional of Florida. And of course, my phone number, 941-699-6193. Always happy to talk shop and discuss how we could maybe get your situation where you want it to be.
Amazing. Denise, thank you so much for doing this with me today. Really appreciate you and all the insight. I know we went a little bit over the time that we discussed, but this was just awesome. I really, really
Thank you.
appreciate you. For those of you watching, if you're interested in buying, please make sure to reach out to Denise because she's going to be a fantastic asset for you. And if you're thinking about ready, or if you're thinking about making a move, or if you're ready to go ahead and schedule a call, there's a link below in the description where you can download my home buyer roadmap, and you can schedule a call with me one on one, no strings attached, and we can go ahead and talk about strategies to get you into home ownership. Denise, again, thank you so much, and
Thank you,
I'll
Daniel.
see you soon.
Yes, you will. Take care.
Take care.
Bye.